What's up, guys? My name is Nick, and welcome to the channel. So this is the first episode of what I'm planning on making a weekly series where I will go over my stock portfolio every Sunday. So this app is M1 Finance. That's where I have my stock portfolio. It's my favorite platform to invest on, mostly because when I first got it, we had fractional shares that you could buy. Because I noticed that a lot of stocks were pretty expensive. So I love the fact that I can have a fraction of a share of a great company that I can buy. So as you can see, my current value of my portfolio is 43,650 and $97. And I know that seems like a lot of money. That is a lot for me. That's, more than I made last year. But I just want to point out that I only started my portfolio on September 17th. It says about $2,000. So about 7, 8 years ago, I used to work at a car wash. I was making minimum wage, 7.25, and then tips. And I'm making about $10 an hour in tips. And so I started a 401k with them, and I ended up putting about $1,200. And guys, I did not make any money with my 401k. I picked the worst funds. The expense ratios were insanely high for those funds. So I lost money every year. And it wasn't until about 2 years ago, two and a half, that I got into M1 Finance and I sold my 401k. I took a 10% tax hit, and then I just threw all of that money into M1 Finance. And then I had an extra $1,000 saved up, so I put that money in as well, and that's how I started with 2K. So something I want to bring up is my gain. Don't go based off this money on this number, because this is kind of weird how M1 Finance does a money weighted return. My real market gain is right here. It's about 5,900, but even that's wrong because one of my stocks, FRT, we recently is going through a merger, so it knocked off about 1,100 of my gain, so I should be in the 7,000s. But what I really care about right here is the dividends, the earned dividends of $1,906, and that's what I've earned over 2 years. And in fact, now M1 Finance has a feature where you can look at your earned dividends. So I think this is really awesome. As you can see, most of my dividends come from my real estate pie. So I'll show you guys that in a little bit. Next up is my Trifecta Pie, which it holds Q Yield, NUSI, and JEPI. It's my income fund. And as you can see, Altria Group, Southern, AbbVie, and then the list goes on all the way down to MasterCard, which does not have a very high dividend yield, but they do have high dividend growth. In fact, all these stocks, Apple, Microsoft, MasterCard, American Waterworks, Costco, they all have very high dividend growth rates. And so that's what I do when I invest. I look for great companies that have, a wide moat. They have strong fundamentals. They're companies that I use in my daily life. As you can see, like I have Verizon, I use them for my cell phone. Pepsi, eat their snacks and drink Pepsi. Costco, all these stocks that I buy are something that either I use in my daily life, my family, or stuff that I know a lot of people use every day. And so I'm going to go over to my activity feed, just where you can see the dividends I earned. For example, LTC gave me a $7.68 dividend, and then Good gave me $21.73, which is awesome. Now let's talk about Devo. So I actually bought Devo on, I think right here, December 27th. And I was holding some bonds, but I decided to sell them for Devo. That was on the 27th. On the 28th, Devo had their ex-dividend date. And then on the 30th, I think they declared it. And then as you can see, I sold Devo on the 30th and I bought more Nusi and Jeppy. And I can actually go into, but I still received the dividend from Devo. So I can actually go into why I sold Devo. So if we go to Trifecta, originally I had Q yield at a target weight of 50%, and I had Jeppy and Nusi at 25%. And I just thought that that was too high of a weighting for Q yield to be half of this pie and half of this portfolio. So I was gonna add Devo and put everything at 25%, but then I decided that I didn't want to own too many income stocks. Like I was already happy with Q yield, Jeppy, and Nusi. So I just decided to make this pie a little bit safer and go with the 40, 30, 30. So guys, if we go back, like I said, FRT, they're doing a stock merger. So they sold all of the shares right at the end of the year. And I imagine they'll buy them back up. And I hope it doesn't change anything with the dividend. Because if I scroll down, well, actually, if I go to FRT, they give me a pretty good dividend. So I love this, how you can just go to the activity feed and just filter it by dividend. So as you see, last time I got paid by FRT was October 15th, 2021. They gave me $12.13. So that is something that I'm looking forward to with this stock, and I don't want anything to mess that up. So next, I can actually show you my holdings, which the other day it wasn't showing my unrealized gains. But here on holdings, you can see how much my portfolio has actually grown. So over about 2 years and 4 months, almost 2.5 years, it's grown 18.21%. And so as you can see, Apple has grown the most, then Microsoft, ADP, Pfizer. And I actually thought FRT was higher up on the list, but I guess since they sold it, it's gone now. Another thing you can look at on M1 Finance is the funding history. So as you can see, I put in 7,700 in 2019, almost doubled it in 2020, not quite, and then just put a little bit more in 2021. And I haven't withdrawn any money. I don't plan on withdrawing any money from M1 Finance for at least 10 years, maybe 20, depending on when I decide I want to retire and start pulling out the dividends. But guys, that is why I'm starting this portfolio for passive income. I have quite a lot of shares. I think it said I have 34. You scroll down, you see I have a lot of different companies. Yeah, I will live off the dividends from my portfolio in the future. Basically, my strategy when it comes to investing, I'm a dividend growth investor, and I'm just looking for, safe, secure blue chip stocks. And then I do add a little bit of risk. For example, I think a stock like Altria Group is risky because I don't know in the future if so many people are going to be smoking cigarettes or vape or whatever they plan to use as products in the future. But one thing I do want to point out about my stocks that I love is the synergy with my stocks. So for example, Walmart and Costco, if you go to Walmart or Costco, you can buy Pepsi products, their snacks, their drinks. You can buy products from Microsoft. You can get an Xbox Live card, which I've done before. You can buy products from Pfizer, 3M, Apple, General Mills, Procter and Gamble, Johnson & Johnson, Kellogg's, Hormel, Colgate, and then, Clorox. You can buy those products at Walmart and Costco. And not only that, when you go to pay, you're probably using MasterCard. And again, you can buy Texas Instrument products there. And then after that, Costco and Walmart probably use ADP for their payroll. So this is what I love about my portfolio is the majority of my stocks blend together and they work together. So now I'll show you guys my real estate pie. And as you can see, the earned dividends, $736. And the market gain, I would imagine, would be higher if they didn't do the stock merger for FRT. But as you can see in my real estate pie, it is a little bit riskier. However, I do have some solid companies that are safer, like Realty Income, Stag, and FRT. Blackstone was actually a stock that I was expecting to be very risky, but it's actually performed very well, and they haven't never cut their dividend. LTC is also I've got to say they're my riskiest. They have not performed well. If I click on them, as you can see, their total market gain is lower than 0, but they still provide great dividends. So until they cut it, if they cut it, I'm going to hold on to them. And another company that I thought would be risky is Good. However, I looked it up and they actually are receiving, last time I checked, they're receiving more rents than O Realty has. And as you can see, that dividend increase is amazing. And or that those dividends that they provide me are amazing. And actually, if I go to Good, this is my one regret with this stock is that I did not buy more of it. So if I go to the very beginning, in April 13th, I bought Good. Look, share price of $14. Now it's in, we'll check. Look, 13.57. Oh, wow. See how much it grew just in a few months? If I go to my portfolio, real estate, look at Good. I think the price, yeah, $25.77. So I wish I would have thrown so much more money into that stock when it was only in the $13 and $14 range. So as you guys can see, I have about cash balance of $51.68. And if I had to say one of the downfalls of M1 Finance is it does not reinvest your money unless you have $25. It used to be 10. When you had $10, they'd automatically reinvest, but now you have to have $25 in your cash account for M1 Finance to reinvest that money. And so I've got auto invest off, but let's see what M1 Finance is going to buy when I turn it on. So I just come here, 4 buys upcoming, view the details, and as you can see, they're going to buy MasterCard, Kellogg's, Clorox, and Texas Instruments. And I'm actually going to turn that off. But this is one of the things I love about M1 Finance is that everything is automated, which means I don't have to think. I can focus on what's more important, like researching stocks and figuring out, how much of the percentage I actually want in the stock, or how much of my money I want to actually allocate to a stock. So for example, MasterCard is supposed to be 2% of my portfolio, but it's actually 1.2%. And if we go here, it should show me. On the app, it actually tells you where the stock is, whether the stock is underweighted or overweighted. And right now, I don't see that on the website, but I'm going to pull up my phone real quick just to check, because I know, as you guys can see, it's 1.2% out of 2, so it's definitely underweighted. And if I scroll down on my phone to MasterCard, it is currently $312.36 underweight in my portfolio. And that's why when I did the auto reinvest, they put the majority of the money in MasterCard. And so that's why I actually love the auto invest with M1 Finance. It's not like drip, whereas drip you would reinvest back into that same stock. I like that M1 Finance decides where I should put money in because I don't want to just I don't just want to put every dividend back into the same stock. I believe in the stocks I bought, the reasons why I bought them. So I want my money to go throughout my entire portfolio. And all right, guys, I think just have a few more things to look at. Gone through the activity. Yeah. So I actually want to clear everything and just show you guys that every Monday I deposit $125 into my portfolio, and I do this consistently. And then usually what I buy right now, I'm putting my money into Q Yield, Musi, and Jeppy. These stocks have a high, they have a high dividend yield, but I also see them as safer than other high dividend yield stocks. And then what I'm doing is I'm letting the dividends from stocks like Q Yield, Jeppy, and Nusi reinvest back into my portfolio. So if I go to the beginning of December, I actually got a great dividend from Q Yield, $22.91. Then as you can see, once I received that dividend and also from American Waterworks, it reinvested into my portfolio into Merck and Clorox. So I'm using the higher income from my Trifecta Pie to buy my other stocks. And so guys, I'm gonna end the video here. Thank you guys for watching. If you guys would like to see portfolio updates every single week where I show you guys the ups and the downs, the good and the bad, go ahead and subscribe to my channel. Hit the like button. That would really help me out. And then guys, leave a comment below. I'll be answering all your comments. And in the future, I'd like to do a Q&A. So go ahead and ask me any questions you have about, investing, personal finance, the stock market, and I'd love to answer them. So thank you guys, and I'll see you next week.